Let's move last into our Queen's Court. Now, I already kind of highlighted a little bit. Each and every Tuesday, whenever Coach Emily is here, we run through a quick little game of analysis where each of the coaches who are present on the halftime report submit one stock idea from an investment or trading perspective. We are open to either angle, either idea here for the Queen. The only requirement is the Queen gets to judge every bit of it, one way or the other, whether she loves it, she hates it. If she does not like it, she can chop our head off and have it rolling down the hill. Queen Emily, you are up.
All right. Well, since Matt already kind of gave us his analysis on Key, let's have Mark go and let's see what he's got to present for us today.
Emily, I'm Bob from Boise.
No, I'm
Ted
sorry,
from
Ted from
Boise.
Boise.
I like Bob from Boise better.
The alliteration of Bob from Boise, Ted from Tulsa. I get it.
Ted from
Yeah,
Tulsa.
okay. Yeah, Bob from Boise.
I get it. Listen, a simple one for me, Emily, and it has more to do with market response. No big theme here, like I normally do. Normally, I present a theme and what I like and the big picture. This is more if you don't have defensive stocks in your portfolio, take a look at this. Give me Pepsi. Now, I thought Coach Greg last week did a masterful job pointing out some of the technical aspects of different consumer staple stocks across the spectrum. Kind of his wheelhouse to begin with. He gravitates, but he was showing some of the relative strength. Yesterday, topsy-turvy day, right? Pepsi barely budged, a little bit up, a little bit down, tried to stretch his wings. I love when I don't have exposure to an area of market where I have some of the key elements from a technical perspective. Give me a longer time frame, a 1 year, a 2 year, something. Pepsi had a really long consolidation pattern up and down post-pandemic. Shot off the March lows, kind of meandered, found a support level in the 130-ish range, 127, 130-ish, found a resistance level in that 148-ish range, but just meandered. Post earnings last week, though, another plus on Pepsi, post earnings last week, positive earnings report, positive price response post earnings. You didn't see that across the board last week. In fact, you saw really good earnings reports, really negative response. And so if I don't have, because this is a don't be a hero environment, right? I know we're getting great price response today, but it's been a rocky little stretch. And if things just go to the moon again, great, I make money. But I don't know how much defensive aspects to your portfolio you have. So I thought it would be a good choice and a good presentation. A company that had really good earnings report, pays a decent dividend. Last week on buy one, hold one, dump one, Greg highlighted Pepsi, made a strong fundamental case for Pepsi. So I'm not going to reiterate that here now. Just going to point out the extra sentiment. You had analysts across the board upgrade it, but really it's that technical level, that technical breakout level in an area that has shown relative strength in a very choppy market, to say the least. So if I was looking for conservative cash flow, I really love in this scenario where I get that lift off and I'm not going to directionally trade, looking at those naked put levels that are above the old breakout level, that you have those rising weekly moving averages, which check the box. So in that 150, if you want to get froggy, 150, 250 range represents price levels that from a technical level, like let's say market spooks again, right, in the next month. Well, you got an area of the market that's right now in favor. You have a stock that bucked the earnings trend last week and had positive price response. You got a strong technical barrier in the old breakout level and a rising weekly into it. So if you're looking for defensive aspects to your portfolio, which not a lot of people have, especially because of the nature of the market in 2021, there's a lot of boxes Pepsi checks on a cash flow perspective above the old breakout level. So I present Pepsi.
Great analysis on Pepsi. And this was on a Queen's Court. Maybe it's been a few months now. And I remember, Tim trying to trick his way into figuring out what my favorite beverage
Oh,
was
that's
between
true.
Coke and Pepsi. And I said I love Coke, but I actually traded Pepsi. So so
Mhm.
I have exposure to Pepsi, but we talked about this too in the lab. So I kind of have a feeling like you guys are, I don't know. I'm gonna have to go look at those names of the people that are showing up in the labs. But we talked about this
I'm
yesterday.
Walt from Washington in the chat, by the way. So
But we did talk about money shifting from those growth areas of the market and kind of coming back into the into the growth part of the market, come back into the value area of the market. And one of the areas that I was looking at was, something like this, looking for stocks that, either are past earnings or earnings is a little bit farther away, nice setup still, and being able to just find something that you can get into. And this is a great chart on Pepsi. I didn't have it on my radar, but this is something that I could look to see what I can add more exposure to, especially now that, we're in earnings seasons. We got all the tech companies coming up. We're just past banks with their earnings. So this is a good one. I like this one.
thank you, my queen.
And the naked put strategy is a good one.
Well, can I just make one point on the naked put?
Mm-hmm.
It's your pick, Chucky. Do you want?
Oh, no, absolutely. Go ahead.
The only thing I'd say on the naked put is because volatility in Pepsi is so low, you're not selling a naked put here simply to cash flow. You're selling a naked put here to say, I wish I would have bought it at 150 last week. I'm going to sell that at 150, bring in a little cash flow. If I ever get the dip to 150, that's where I'm looking to acquire it, given the fact that that is a beautiful support level.
Yeah, and that's why I prefaced it, Matt, when I said, I don't know how your portfolio is structured right now. If you don't have those defensive stocks, because, but that is a good qualification because you're not just doing it for cash flow. There's a lot of just
There's
cash
a lot
flow.
of things, and I just want to bring up the point because there's a lot of things we do for cash flow reasons, specifically for cash flow reasons. But this one, it's Pepsi, it's consumer staple.
This is hey, listen, this market's a little crazy. I don't want to be hero. I don't have defensive exposure.
Yeah.
What's a nice conservative play that if I took
Yep.
ownership, it fits within my portfolio plan?
Yeah,
Awesome.
this is a naked put strategy to actually acquire the stock.
Yes.
And I love it. Tim, you're up next.
All right.
Tim.
Eagerly anticipating my opportunity to get my head chopped off right now, but I'm going to stand behind my analysis because I really like to pick here today. Staples and these defensive areas were one that I was interested in. I even thought about going down this route. If you look at XLP, like I talked about earlier, it's come up off the lows. It's up near resistance. I think there's opportunity for safety in Staples, no question about it. I like healthcare. I love the HCA momentum play that Matt talked about earlier. Healthcare is absolutely in play. I looked for candidates in there. There's plenty of them, but I ended up staying with the area of strength in the market. Matt, if you look at the tech sector, XLK, real quick, just to kind of highlight my thinking as to why I did what I did. Emily, there's two plays in the market, in my opinion, right now. There is the defensive plays, and then there's tech and the momentum plays. And momentum plays are still intact, and we're getting the fire back response today, showing me a lot of strength in the tech sector. And I went through a lot of these components. Microsoft's looking good. Apple's looking good. Many of them have earnings right around the corner, though. Here's a company that doesn't, that has a wonderful technical chart. Give me Oracle if we can, the $240 billion juggernaut software company out of Oracle, has a very, very clear high base developing. Now, this one is a Keycorp pick set up as a trade, not an investment. Some of the fundamentals behind Oracle, though, are supportive of longer term thinking if you're looking at that. PE ratio, forward PE ratio, lower than the S&P 500 right now, lower than the sector and industry. They come in at 19 and 17 respectively. Oracle is just a wonderfully run company. They've had a share buyback program in place for several years, even kept it through the pandemic, by the way. Earnings per share skyrocketed in 2021 from 2020. But this whole setup is on the chart. The strength of it is on the chart, and also a little bit of the options analysis. Clear trigger above the high base. Matt did that wonderful trading pattern recognition webinar on our YouTube channel a couple of weeks ago. If you've not seen it, go back and watch it. It's in our video archive. We talked about high bases, and that is a clear high base developing. Breakout there. I think you've got a nice T2 target up at $100, by the way. I really do think that you can target somewhere in there. T1 target, much more conservative, probably using a couple of ATR ranges, but that's trader discretion. I'll leave
I got you a good T1 target if you want it.
Give it to me. I love it.
Okay. T1 targets on high bases. You can look at different targeting techniques. The one I like to look at is on previous breakouts. How far did the stock like to run? You go back to the little high base breakout you had right here. You ran from 75 to 80. You look at the breakout following the ascending triangle pattern right here of 80. It runs to 85. Stock loves a 5-point movement. T1 target would be 94. T2 target, I'd be looking
Trail
at 100 as well.
Yeah, trail stop probably,
Yeah.
but anticipating the potential.
I would
of
say
100.
94 by 100 is legitimate targets here, though.
I think that's a wonderful plan for targeting here. And the stop loss placement as well for trading, Emily, is really clear. You can either play an intraday level below the breakout channel, but you can probably just play the whole base range down at 86. Yeah, absolutely. $3 risk on that $5-6 reward expectation and the T2 target. You can make the numbers work here in the way you want to craft it.
Clean intraday setup.
This is so beautiful.
It's a beautiful
intraday
setup. Here's the kicker for me. There's two simple ways you can play it. Equity. Equity is simple. In the US, you got zero commissions in most brokers. Sorry, Canada. I know that always triggers my friends from Canada. When Coach Greg's here, he hates it when I say that. But it is true. So you can play the equity. But the options, I got to tell you, implied volatility is pretty cheap for Oracle, 27%. This stock already had earnings last month, Emily. So instead of all the tech companies in front of us with earnings, we have one that has earnings behind us. Go out to October. It's exactly the contract I was looking at. There's two I'm considering though, Matt, actually, and I haven't made the decision yet on the way that I craft the trade when I get confirmation. That 87-day 87.50 is right at the money, in the money currently. But that 91 at 47 delta, it's slightly out of the money, but it wraps in the money once we catch the breakout and it starts to move a little bit. I think both of them are fine. By going to 87, I'm avoiding major theta decay in the contract, and the volatility chart shows me potential for growth into the next earnings. I like stock here. Believe me, I love simple trades. I like the call here. Straight call, delta trade on momentum, completely different kind of animal than Mark. We're showing our character here in the way we trade. He wants the naked put on a safety play, give him a nice.
You're only paying 4% on the option. You're only paying 4% against equity price. It's a call option.
I like this option here, Emily. Yeah. So here's my analysis and my pick for Oracle, momentum trade and tech.
Do I need to pull up implied volatility to confirm that?
No, we're good.
I didn't think so. I just wanted to, but it's low.
We are good. This is a beautiful chart. This is textbook, right? Textbook high base breakout. You've got also just a beautiful support zone where you can put your stop loss. It's one of those things where you just look and you're just like, it's beautiful. So as much as I wanted to chop your head off today, because you did refer to me twice as Emily and not Queen.
I noticed that too.
Cannot.
He makes it. Mark did too.
He just does it to himself. He does it to himself. But even with that, I cannot chop his head off. This is a beautiful chart.
I don't care much for the monarchy, by the way. So
it's getting feisty.
We still have next.
Dude!
It's like he just wants to die. It's like he just wants to die.
Seriously.
He just wants to die. Even when I don't want to kill him, he wants to die.
Mike Quinn, I submitted a wonderful bit of analysis. I hope you respect it. And I do not. I want to live and please the Queen.
Oh, yeah.
Chop his head off anyways.
He just said he didn't
just
respect
tell
the
me
monarchy.
to do it. I'll do it.
You know what, Matt? Just do it. I mean, you had it. You had him for a whole week.
Buddy.
I don't even know how you guys survived.
I'm bringing in the executioner.
Okay. You chop him. I won't do it. You just chop him.
I'll chop him.
It's a beautiful chop.
It was like, I don't know. Matt's like, I'll do it. Raise his hand.